What is going on, everybody? This is Andrew from DeFiancy. So we decided to make another update video today to catch you guys up to speed on some of the macro stuff, specifically Taiwan. We're going to go into the charts to show you kind of how price is reacting to some of these events. And we're going to finish off talking a little bit about DeFi. So unless you're living under a rock, you've probably heard about the Taiwan incident that is occurring right now with Nancy Pelosi visiting there. China's not very happy about it, and they've been sending out threats. Now, we're not going to dive too much into this because, look, we're a DeFi channel, but it's important for us to talk about this in relationship to the price of crypto assets. So basically, and I'm actually going to go to the charts to show you kind of what has happened. We had quite a bit of a sell-off, and I'm going to actually give you guys a blank chart here. Pardon me. We had quite a bit of a sell-off over the last few days. If you were fortunate enough, if you're trading, you caught a short up here and have been riding this down the whole time. The interesting thing about this move down is you notice how it's very organized. There's really not a whole lot of very big move downs. It's somewhat just kind of chopping down. And for me, that was actually somewhat bullish. The fact that it's just not nuking down, it means that you did have some buying pressure, but the selling pressure was obviously a lot stronger than the buying pressure. So you continued down, but I think this has a lot to do with people de-risking. So people who may have entered here that were like, okay, I don't know if this is going to go any higher, and then maybe they closed their shorts, or maybe they closed some of their longs or opened up some shorts as an insurance policy. We call that a hedge. And I think that's, a big reason why we've been going down. Now, it's interesting because this morning you had Nancy Pelosi, she actually landed. And when she landed, or supposedly landed, there was a fake video, I'm pretty sure, that got tossed around Twitter, and the market pumped. So that's a pretty good sign, showing you that the market's pretty smart. It realizes that this is probably a nothing burger. Don't get me wrong, we're not going to get into the geopolitics here, and I'm not saying that the issue isn't serious. But for the most part, I think people realize that the United States and China are not going to go to war today or tomorrow or probably anytime soon. And that a lot of this is just posturing and really just a game being played between the two nations, right? Anyway, so we talked last video about, and I think we were somewhere up here when we made this last video. We were like, look, this thing's probably going to pull back, and that's when I'm interested in getting back in. And we're here. So, the levels are the same. So if you look at this level here, this is the 200-week moving average. And I keep saying that on repeat, right? Like, watch this level, watch this level. Well, look what happens whenever you get there. The market really has an interest in this level. It is seen as very significant in terms of being support and resistance. Now, I don't want to make too bold of predictions in really any of our videos because, as a trader, I'll change my mind given the data. If the data changes, I'm not going to sit there and be like, oh, I'm going to hold on to this, idea. I'm a profit maximalist. So if the data changes, fine, I'll change from bull to bear or bear to bull. I try to keep an open mind and just go with what the data says. And I've changed my mind a little bit, I think, from the last video. Maybe the market got a little bit bullish in terms of us kind of skating on up to this level very quickly. And there's a reason why I'm a little bit more, and I don't want to say cautious because I think it's, depending on how you look at it, if you're a trader, you don't really care if it goes up or down as long as it goes your way. But if you're a spot back holder or an investor, these are things you probably do want to, pay attention to. We are printing what I would consider to be a bearish pattern. So this is typically what people would call a bearish or a bear flag. Okay. And I'm not saying that this is going to play out this way, but these patterns are patterns that traders look at for a reason. I know a lot of people think this is like astrology and stuff like that, but the reality is they're patterns and they have statistical significance. Like this pattern here, usually like 80% of the time or somewhere around there, it'll break to the downside. And I can show you numerous what they call rising wedge bear flags that have happened exactly that way. Okay, it doesn't take me long to show you what I'm talking about here. This one wasn't quite as obvious because it kind of went more sideways. But look at this. This is like a textbook bear flag here. Okay, and I can keep going, through this chart and just show you bear flag after bear flag. Okay, and I know I went through this in another video, but just to show you how accurate these signals typically are. The opposite of a bear flag is a bull flag. So it's a falling wedge, or falling wedge, I guess is what we call it. Here's another one. Okay, and notice how they break to the upside. So I actually have a lot of faith in the charts. I think the charts actually show you a lot of, you see the reality. This is the price moving. Now, obviously, I like to use other data sets in confluence with this. But I got to be honest. If I'm just looking at this and I put the emotion-driven news and the Twitter to the side, and I just look at this, I'm like, that kind of that looks like that wants to break down. And I'm not saying that you nuke or anything like that, but typically these things do like to break the downside. And honestly, it would make a lot of sense for me if this did come and retest this level. I've been saying this for a while, that I believe that this level will be retested and probably broken. I don't think the macro bottom is necessarily in. I'm open-minded to it, being in. But anyway, I don't want to act like I'm super bearish though, because at the end of the day, there still is a possibility that we could continue to go up. Look, this is a level of support here, very critical level. All right, we talked about it in the video. For me, if we're not able to hold basically this level here, you're pretty much going to have to, you're going to test the lower part of this range. If you close below this on any meaningful time frame, 4 hour or, daily, really, I believe it's very likely you go to the downside. But if you can stay above, what they call the POC here, and stay above this, especially, above the 200-week moving average, things look considerably bullish. So, right now, like we took a trade off this level. Let me zoom in here. It's pretty simple. We took a trade off this level because, look, you're getting support. It looks like it wants to bounce. But like I say, from a trading perspective, I'm not married to the idea of this going up. If it starts to look weak, if it starts to, let's say get caught up right here at this level of resistance, that'd be a level I think a lot of people would probably cut their longs. So anyway, that's not important. But one thing I want to show you, really want to show you that's very interesting that I don't think I've seen too many times, or at least recently, is this chart here, which this is what's called a heat map. And don't worry about all this stuff, but just notice that this very thick white stuff here, this is actually not typical to see this much liquidity on an exchange. So there was about, over like 10K, close to like 12K Bitcoin at times here. And this is what's called bids. That is a lot of Bitcoin, and it is very difficult for price to go down below. That's like $200 million or something like that. And that may not sound like a lot, but on an order book, that is a lot, especially when it's on one exchange, because this is on Binance Futures. And I'm noticing that they're basically, it looks like they're kind of playing ping pong here. This may be the same people, because now they got a bunch of liquidity up here. It looks like they're kind of trapping price. It's going to be interesting to see how this plays out. Like, as if it goes down, do they put more liquidity back here? We're going to see. However, I do think this probably does break to the downside. I'm not expecting this to go up too much higher. But again, if the data changes, we will change our mind pretty quickly. That's pretty much all I want to show on the charts today. But there is one thing I want to talk about, actually. Let me get this out of the way. There is one thing I do want to talk about, and let me see if I thought I had this pulled up, and now I'm realizing I didn't. So bear with me real quick. I'm gonna go to my tweets because I know that I retweeted this. There is some significant things to look out for apart from CPI. So CPI is going to be the big metric people are going to be looking forward to the release of, to see if the markets are going to continue to go up. That's on August 10th. And, if inflation is decreasing, the market will perceive that as, bullish. Here we go. going to my Twitter page to see something I retweeted because it's here it is. This is such a good explanation. There's two things outside of the CPI that we're going to get on August 10th that could have, reasonable or maybe even quite volatile reactions from the market. And that is the manufacturing PMI. This is basically shows you how the United States manufacturing sector is doing. And more importantly, probably, which is the U.S. employment data. Now, this data actually came out yesterday, so we're going to talk more about this one. The market, in terms of risk assets, will appreciate if you see bad employment data. Now, you may be wondering, why is that the case? Why would the market be bullish risk assets if employment data sucks? Well, the reason is the Fed has two jobs. The Fed, their job is to, number one, make sure that prices are stable. At least that's what they say their number one mission is. And maybe equally or maybe slightly less important is job numbers, so employment. So if employment data sucks, the Fed is not going to be able to keep these interest rates up like they are or increase them. However, if the employment, and by the way, the employment data has been good on paper. If the data is good, it kind of gives them a reason, okay, we can keep rationing up these rates. Things are okay. We're not breaking things. But if you see this data on Friday look weaker than previous months, the market might bounce or like that. It might move up. And on the flip side, if the data is good, meaning it's like, the employment data is good, the markets won't like that. Because right now the market, in terms of risk assets, wants every reason to believe that the Fed is going to be lenient on interest rates. That's all the market really cares about in the short term. Okay. So we're going to keep an eye on this, but the big day, probably bigger than this, assuming that this data isn't just like way out there in terms of what people are expecting, is going to be August 10th. There is not an FOMC, which if you don't know what that is, that's when the Fed tells the press what their chosen interest rate hike or cut is going to be for said month. Apart from that, this is going to be, CPI is going to be the biggest game changer going forward. Because if the CPI is lower, I think the market is going to react very positively, because that would indicate to a lot of big players who want to put money into risk assets that they're safer. Basically, they're not going to have to worry about waking up one day and the Fed's like, yeah, we're going to do a 100 basis point rate hike or another 75 basis point rate hike. So the market wants a lower CPI and it wants bad employment data. It's really what it wants. So that's what we're going to be looking out for. I do believe that August 10th, you could see a significant shift in the market. If that data if it's showing that inflation is significantly decreasing, you're probably going to see the market try value higher. Now, if it's neutral or worse, I don't know. That's a good question. If it's worse, that would be pretty bad, because a lot of people are betting that it's going to be better. And to be honest with you, the data looks like it is going to be better. The preliminary data, which is crude oil and other things that do have broad, second order effects to price stability. Okay. All right. We're not going to focus too much on this. I want to talk more about DeFi than anything here. Okay. So the DeFi Pulse Index looks kind of the same, meaning the total locked value, is pretty much the same. We did have a hack. I don't want to talk too much about this because most people probably don't even know about this bridge. There was a big hack. It was like $200 million hack, 190 million, something like that, on the Nomad bridge. If you don't know what a bridge is, these are basically protocols that allow you to send funds from one blockchain to another. It was hacked. But that doesn't seem like it's had a huge effect on DeFi. Obviously, we don't like hacks. It can scare investors and people trying to get into the space. These things are, they are the weak points, so to speak. The bridges are kind of the points of failure, and a lot of different hackers, they're actively trying to break them. So that's not really a surprise to me. I wanted to mention that in case in case you're wondering what that really means, basically what that's going to mean for the industry is we need to have better bridges, and we're working on them. And to be honest, this is a bullish case for Ethereum, because with Ethereum and Ethereum layer 2, you don't need bridges that are quite as risky, in my opinion. Yes, there's still some risk involved, but in my opinion, you significantly reduce the risk when you go from roll up to roll up instead of a layer 1 to another layer 1. It's a whole nother story, but it's just kind of my 2 cents on it. I want to talk a lot about Maker here. Okay, in each video preceding from here, going forward, I want to talk about Maker and some of these other protocols. This token is very undervalued if you look at what this protocol is doing right now and its long-term value case. I'm not saying that it's necessarily undervalued right now, but when you look at what is going on right now on Maker, and let me show you a little article here. MakerDAO has basically broken a barrier. They have broken a barrier. They were the first DeFi protocol to integrate with a bank. This was actually done last year, I think around November or something like that. But what they've done since then is they've increased what they call their real world asset vault. So Maker has a bunch of vaults, right? And they started off basically just having vaults where you supplied ETH and you could take out loans against that ETH, right? Well, then they started, and that's single collateral. Then they moved on to what they call multi-collateral vaults, which you could supply other assets like USDC and Bitcoin and other ones. But now they're moving past that to real world assets that are, being collateralized on the blockchain. And right now it's like 10% of like those assets only represent 1% of the total locked value on the protocol, but yet they're making up 10% of the protocol revenue. That's a huge, that's ridiculous. So that's like you saying, like, if you had, I don't know, like 2 jobs and one job only took 1% of your time, but it was making up 10% of your revenue, you'd be like, oh, okay, I want to do more of that. So I think you're going to see more of this. They have additional, I think they have a chart up here showing you the different players here. Maybe they don't, but anyway, they got additional companies from the legacy, from legacy finance that want to jump in to this, this real world asset game. And I think this is just going to keep scaling. You're going to see more banks that are going to want to do this because they get to take out loans and DAI with very low slippage and really low risk, actually, how these things work. So it's a win-win for the protocol, MakerDAO, and for like the banks or these other institutions that want to do this. This is really, really, really significant. I don't think people understand what this really means, but this is basically laying the foundation, the framework for massive amounts of capital to move into DeFi. Because they're going to want examples. Like no one, a lot of people are scared to be the pioneer, the trailblazer. Well, this bank that did this last year and a few others, they are the trailblazers, and other big players are going to see that success. And at the end of the day, it's all about money, right? If they think they can make, a good revenue doing this, and it's low risk, which by the way, DeFi protocols significantly reduce risk in many different ways. It also increases risk with smart contract exploits. But apart from that, you take that away, they're decentralized. No one can really, they can't, a lot of people don't understand like the transparency behind it is very attractive, right? At least in my opinion. I'm not, I don't work that much in legacy, so I don't want to act like I'm an expert on, this part of the legacy part of getting into this protocol, but I could just see intuitively how they would see, wow, like there are some massive advantages to how this system works. And I believe you're going to see more and more of this. So look, this is not financial advice. I'm not saying, look, go buy a MakerDAO token. I'm not saying that, but I do believe that it does have a value, or it does have real world value, because at the end of the day, the protocol, and let's go to Maker and just kind of look at it real quick. The protocol Maker has rules. It has regulations on how it's built, how it distributes money to its token holders. You may say, well, why would I want this Maker token? It's a governance token. Well, what if you wanted to divert funds to yourself? And I'm using the most extreme example, but like, Wouldn't you want to have a lot of votes on Amazon's board? Wouldn't you want to have a lot of votes on Facebook's board or Apple's board? Well, how do you do that? Well, you got to have a lot of Apple stock. You got to have a lot of Amazon stock. Well, how do you change how the Maker protocol, which could be this extremely, integrated protocol across the internet over time, multinational? Well, how do you change its rules and regulations and how it functions and how it diverts funds around? Well, you got to have the token. So this is why I know a lot of people are like, governance tokens, I don't really see the value case. People are going to see the value case that already, basically live in that model or operate in that environment where they need to have a bunch of stock, okay, to be able to affect the price of the stock or the company, right? It's control, it's power, right? If I own a bunch of Maker tokens, I can actually change how it works or vote on it with other people, right? So I do believe that this token is extremely undervalued for what it can do. Yes, it does have a market cap around $1 billion, but that's small potatoes when you look at some of the legacy companies, let's say in the NASDAQ or the S&P 500 that do a fraction of. I mean, look how much it has. $8.5 billion locked in its protocol, but its market cap is $1 billion. I'll just leave it there. I think there's a discrepancy there, and I like the asymmetry in that one stat alone. Okay, guys, well, that's really all I want to cover today. Until next time, happy hunting, friends.